Sharia-compliant investing is possible as it adheres to Islamic values and norms. This investment approach excludes certain industries, including activities incorporating alcohol, gambling, and interest-based financial, while emphasizing investments in morally responsible and socially useful businesses. This Sharia-compliant investment schemes based on equities provide a dynamic and instructive platform for us as students to learn and engage in Sharia-compliant investing.
Okay, next I will talk about our objective investment in investment camps. First is to adjust the growth targets based on our growth risk tolerance. Next is to maximize losses while achieving some growth. Besides that is to consider investment with higher return potentials despite increased volatility and potentials for larger losses. Moreover, is to achieve a quantifiable increase in the initial capital. So our group target profit is 1,000 ringgit, which is in 10%, with initial capital 1 million ringgit in 2 months.
Next strategies to employ. First, let's talk about diversification. The goal is to reduce risk by spreading investment across different asset classes, industry and region, leading to more stable result. Example, real estate like Sunway REIT, agriculture Sunday Bay Plantation Berhad, and banking Public Bank Berhad. Next, we have value investing. This strategy involves finding undervalued asset with strong fundamental trading below their intrinsic value for long-term growth. Example, Telekom Malaysia Berhad and Tenaga Nasional Berhad. Next one is growth investing focuses on company with high future revenue and profit growth potential, often in rapidly growing sector like technology and healthcare. Example, technology Inari Amatan Berhad, healthcare IHH Healthcare Berhad. Behavioral finance highlight the impact of emotion and cognitive biases on investment decision, recognizing and mitigating biases like loss aversion and overconfidence lead to better decision making. Example, understanding the stability of Petronas Chemical Group Berhad to avoid panic selling. Lastly, buy and hold investing involve purchasing stock and holding them for long term. Regardless of short-term market fluctuation, this strategy lowers trading expenses and capital gain taxes but require enduring market downturns. Example, Maybank, Nestle, and Malaysia Berhad. Next one is trading plan executed. Market analysis and selection. We perform through market analysis to identify potential investment opportunity by looking for trend, market condition, and economic data. For example, we identify Gamuda Berhad and IJM Corporation Berhad in Malaysia construction industry due to their strong project pipelines and government support. Next, risk management. We protect our investment by setting strict guidelines, such as not risking more than 2% of our portfolio on a single trade and using stop loss order to limit potential losses. For instance, we place a stop loss order at 5% below the purchase price for Genting Malaysia Berhad. The third one is strategy development is crucial for consistent success. We use technical and fundamental analysis like RSI and moving average to determine entry and exit point. An example is using this method for Top Glove Corporation Berhad and considering market capitalization, dividend yield, and earning growth. Next is investment allocation. Help reduce risk and maximize reward. We diversify our portfolio across bond, equities, and REITs. For instance, our allocation might be 30% in bonds, 10% in accessory, and 60% in stock. Performance tracking involves keeping detailed record of trades to ensure continuous improvement. We document entry and exit point, rationale, and outcome. For example, we track the performance of Bursa Malaysia and document our decision-making process. Continuous learning and adaptation. The last one is this. We stay informed about market trends and development to adapt our strategies. We keep up on news on Sunday Plantation Berhad and the palm oil industry, allowing us to adjust our trading plan as needed.
Assalamualaikum warahmatullahi wabarakatuh. My name is HASYIMAH binti ANUAR SERIRAM, matric number 1212645, and I will present on cut loss. Loss is an unavoidable component of investing, whether you buy or sell an asset. Knowing when and how to quickly cut losses in trading is one of the most critical abilities a trader can have. Cutting losses in stock trading also means knowing when to close a loss position. Cutting your losses early on allow investors to move on from failed investment and put stock in better performing stock. We set 4% loss limit before reducing losses. This means we forecast losses equal amount to 40,000. Our group faced an average cut loss 3.11%, which is 31,100. In conclusion, the fear of loss is greater than the hope for gain. This can cause one to hold onto a losing position too long and lose more money in the process. Investors often get overly optimistic about their investment or become so attached to their stock that they find it hard to let go and accept a loss, even if all signs point to it being necessary. Losses are inevitable in trading, and implying cut loss strategies might help with mitigating the risk.
The first one, technical indicator utilization. Explain the use of technical indicators such as RSI and ECD to gauge market sentiment and momentum. Highlight how RSI readings below 30 indicate potential buying opportunities due to overselling, while MACD crossover signal shift in momentum and buying opportunities. The second one, support and resistance analysis. Discuss the significance of identifying support and resistance levels. Emphasize how these levels help in determining entry and exit points. Illustrate market psychology, where support levels indicate buying interest and resistance levels signals inflation. The third one, market sentiment and news analysis. Describe how broader market trends and news events influence decision making. Discuss the importance of considering external factors alongside technical indicators to assess overall market conditions and potential impact on stock price. Fourth one, volume analysis. Highlight the role of volume in confirming price movement. Explain how high volume supports price change, indicates strong market participation, and increasing the likelihood of sustainable price movement compared to low volume breakouts. The fifth one, risk management strategies. Outline risk management practice embedded in the approach. Discuss method to minimize risk, such as setting stop cross order based on support levels or adjusting position in response to changing technical signals and market conditions. The last one, execution and expected outcomes. Summarize how the integrated approach aims to maximize returns for a significant investment in shares. Illustrate the methodology systematic nature designed to capitalize on favorable market conditions while minimizing exposure to potential downside. For the exit plan, the first one, profit taking and target price. Explain the use of predetermined profit targets to lock in gains. Emphasize how setting specific profit margins such as 20% helps maintain discipline and avoid emotional decision making during market fluctuation. Second one, trailing stop losses. Discuss the use of trailing stop losses to protect profits and manage downside risk dynamically. Highlight how trailing stop losses with favorable price movement allow for potential capital appreciation while mitigating loss if the market reverses. The third one, fixed percentage stop loss. Describe the strategy of employing a fixed percentage stop loss, such as 5%, to limit potential losses on each trade. Illustrate how this method ensures risk control by automatically triggering a sell order if the stock price declines from the entry point by the set percentage. The fourth one, MACD indicator for trend reversal. Highlight the role of the MACD indicator in monitoring potential trend reversals. Explain how monitoring bearish MACD crossover, which is MACD line closing below the signal line, prompts consideration of exiting long position to protect against declining momentum. The fifth one, market analysis. Discuss the importance of monitoring broader market conditions and news events. Explain how economic data, earnings report, and geopolitical development influence stock price and market sentiment. The last one, technical analysis tool. Outline the use of technical analysis tools such as moving average and Fibonacci retracement levels for identifying exit points. Emphasize how these tools help in assessing long-term trends, potential support or resistance levels, and optimal times to exit positions based on price movement and historical patterns.
Based on these investment games, one of the company that we invested in is AAsia X Berhad. First, AAsia X Berhad is a subsidiary of the AAsia Group, which is known for introducing the cost-effective long-haul airliner concept primarily in Asia-Pacific region. The airline is constantly looking for new methods to improve customer satisfaction and its operational effectiveness involving the use of new technologies, providing better customer support, and optimizing routes. Additionally, AAsia X is managed by management members with extensive aviation backgrounds, which shows that the company prioritizes excellent corporate governance processes to promote openness, accountability, and ethical business operations, including meeting regulatory standards and establishing strong internal control mechanism. In terms of financial condition, AAsia X Berhad stated a net profit of 80.1 million ringgit Malaysia alongside a profit margin of over 8% for the period ending March 2024. AAsia X Berhad ROE of 21% indicates that the company is making a significant return on the stock invested by shareholders. Overall, AAsia X Berhad 2023 performance shows a significant improvement in revenue, profitability, passenger volume, and additional revenue over 2022.
Okay, I will explain about technical analysis strategy for AAsia Berhad. Technical analysis is useful for timing entrance, exits, and short-term trade. For the first indicator, we use moving average. You may buy if the price is above 50 and 200-day moving average, which suggests an upward trend. A downtrend is indicated if the price below moving average and suggests selling. As illustrated in the chart, the uptrend price per share increased from 1.14 to 1.54 in 29 April until 14 May. Downtrend with the price below average reached a low of 1.46. For the second indicator is Relative Strength Index, RSI. It suggests to buy if the price begin to rise and the RSI below 30 and sell if price begin to decline and RSI over 70. For AAsia, oversold happened at the level of 24.44 and 26.61, while overbought at level of 71.5. For the last indicator is Moving Average Convergence Divergence, which is MACD. Buy decision happen when MACD line crossing above the signal line and sell happen when MACD line crossing below signal line. On April 26, give a buy signal when MACD line above signal line with low price of 1.39. Meanwhile, the day that can be sold with highest price is on 30 May, which is 1.56 because MACD line is below the signal line.
So, this is our profit at the table, where our profit was not exceeding with our objective, which is our objective is 100,000 ringgit, while our profit is 45,388 ringgit. It is because we was not sell all our stock at the end of the games and sometimes we buy with a small stocks. However, at the end of the game, we can manage and we were at the ranking first.
Finally, these investment games offer significant knowledge in portfolio development and maintenance. We also learn how to do in-depth stock analysis by employing fundamental and technical analysis. We hope that a more in-depth study is conducted so that students out there can better grasp on how to invest in stock.